Those with properties in their personal name always get frustrated with issues of tax. Let's say, for instance, take a Tsepo here with high tax brackets. Are you one of those property investors who are also earning salaries on 9 to 5? And you are busy wondering what will happen, or you are actually also concerned about the additional tax that you have to pay as a result of you having high income. Let's say you're sitting at 40% tax brackets. What could you be doing? So some people then consider situations where that we need to analyze your situation. Is your spouse working? That is another question. Maybe she can be the one managing those properties so that she get a salary out of that, because she needs to work. She could be dealing with tenants, collecting rentals, following up, issuing invoices, looking for tenants, ensuring that the tenants, when they're looking for place, she does the viewing, she assists with it, so that the money that she's going to earn is justifiable. That could assist with the reduction of tax, because it's a valid work. She's working and then deserving that particular money. That's if you might want to be using that particular money on a day-to-day activities. But what happens if both of you are working and you're not interested in actually preserving that money on a day-to-day basis, or like you're not interested in utilizing rather that money on the day-to-day activities? You might then want to consider using a company for that matter, or you might want to consider using a trust. When will these things be applicable? It depends on your circumstance. That's why it's so important to analyze your personal circumstances before you actually make that decision to what structure it's actually suitable. Very, very important. What I'm saying here might not be suitable to you, and don't take it as a gospel. Firstly, you need to sit back and say, here are my circumstances, therefore, which decision can I go with it? Hence, also, you must be mindful that circumstances, guys, changes on a regular basis. Our situations are not fixed. Rather, they are variable. As we grow, as we get older, a lot of things changes in our lives, and hence we also, our strategies needs to change. Then let's take a situation where then you consider having a company. Let's say someone who's not interested in utilizing that money, then that might work for you, because then you'll be taxed at the lower tax bracket. Then we might have to move those assets into that particular company. Then that could potentially reduce the income tax that you're going to be paying on a regular basis. Be mindful that should you want to withdraw money from that particular company, you will be subjected to dividend tax. That's withholding tax on dividends that you will potentially be subjected to. So just be mindful of that. And then also be mindful that upon your death, the value of those shares will be brought into your estate if you're owning shares directly in that particular company. So just be mindful and don't ignore that, so that when you're doing a liquidity test, to ensure that you are aware of the cost that is going to happen to you upon your death, you factor in those shares, so that when you're taking covers out there to ensure that there's a liquidity in your estate upon your death, you also factor the value of those shares. Now, what happens if, let's say, you want to be one of those people, say, listen, I'd rather have a trust so that I minimize on this cost of upon my deathbed expenses. Yes, English guys, again, catch up with me. Then you might want to do that, but we also need to understand, what type of person are you? Is the trust suitable to you? Because the truth of the matter is that trust is not suitable to everyone, right? It has to matter. Do you have assets portfolio that it justifies why you should be having trust? And that's why it's so important. Are you one of those people who continuously build their portfolio? That is very, very crucial. We need to know. Or are you one of those people who just going to have one or two properties and that's about it? Maybe you need to have a conversation with me to say, how do I minimize potential costs so that I transfer as much as possible to the next generation? Because the planning of your wealth is about that. It's about making sure that you preserve as much as possible when you're still alive. And also, it's about ensuring that upon your death, you actually transfer as much as possible to the next generation. And that is very crucial, because we also don't want to do silly mistakes and end up losing money when we're still alive and upon death. And this is where things like trust can be a solution for those people actually who has a lot of money. They can actually do that, right? That is what I'll suggest to you, that analyze that and make sure that you also preserve wealth. Otherwise, Good luck. Let's have a conversation. If you're more than welcome, you're more than welcome also to have a conversation with me. To have further questions, you can book a complimentary consultation using the link on my profile. Then let's have a chat. It's only limited to 15 minutes, guys. Beyond that, I'll have to bill you, right? Good luck.